Hello everyone, welcome to Red Summer Holdings, a real estate partnership comprising of 8 owners, Tochi, myself Zoe, Ramad, Charles, Ikechi, Chima, Innocent, and Ike. Here we discuss the evolution of our business, which shows you how group economics can be successful in regards to real estate. If you believe there is value in this information, please like, comment, share, and subscribe. With that being said, let's get to the content you've all been waiting for.
So for me, right, essentially going through my first property in Florida, and I chose to do it in Jacksonville. So the whole process. This is my first one, so I've never done this before. Obviously, never bought a house, and the entire process is really, first of all, it's really interesting, and there's so much paperwork, which it was good, and I guess sometimes it's like people just trying to make sure things are done in a certain way, so there's no kind of fraud or whatever. But I started off with a property. It was a single family home, and give me a second. I just will pull up real quick. It's loading.
Okay, why'd you choose Jacksonville?
For me, Jacksonville was it's easier because Christina has family in Jacksonville, right? Her mom, her family lives in Jacksonville, like her parents are there and all that. So for her, that's home. And her mom was a broker, right? Her mom used to be like in real estate for a while, and then went into property management, and then during the pandemic, like she actually lost a job during the pandemic, so she just went back to like do her own thing as a broker. So that's what she's back doing now. And so I just contacted her like, hey, this is what I've been told her for a while, like this is what I want to do. And she said, yeah, whenever you're ready, just let me know. And so for me, it's been actually easier to go through that, have like someone there and like go through that process one-on-one, and kind of learning along the way. So yeah, that really was the main reason, right? I feel like, there might have been probably better deals in other places. But I chose this just for the ease of it, right? Especially being my first one. And that coming with a lot of anxiety with it. So I was like, let me do it in a place like I can have someone drive there, someone I can trust, see all that stuff. And that was really it, nothing more than that.
Yeah, that's interesting what you say. So it's interesting what you say though, because like it really points to the fact that like there are a lot of basis or incentives in a deal, not necessarily, even location or money. Sometimes it's like, peace of mind and all this other stuff that like you're sort of alluding to.
Yeah, peace of mind, man. And this is like another side thing, which is probably like an aside separate from this. I was talking to, Daniel Onike. So Chuck and Ramad, he's one of our uncles in the Bay Area. He's been an insurance agent for years, and so I talked to him a little bit about it because I was thinking about using him as my insurer, right? And he says he can't do it because it's out of state. So that's something I didn't know. Like he can only insure homes in California, but if I had a home in California, he can put it under an umbrella insurance. So he can do an umbrella insurance wherever I am in the country. So that led us to a whole different conversation about him actually investing in real estate right now. He's just starting, and he has like 4 kids, and his kids like out of college, one's about to get married. So like knowing like someone that old, like seeing the value in this now. He said he bought a house in Richmond about 2 or 3 years ago now for $800,000, and now it's 1.4 million, right? So yeah, that's like where he said like how much it's grown. Like he only has 2 properties, but he's saying like he's gonna keep like buying more properties, but he doesn't want to buy out of state because he has no one to actually go there and look at it and all that stuff. So back to Elo's point of like peace of mind and just yeah.
Is he using those properties as like rentals or as like Airbnbs, or like how's he drawing value out of it? Is he looking for cash flow, or is he looking for equity? And then at some point when he wants to retire, he'll sell. Do you know what his plan is?
We didn't go too deep in what he's doing. Like I was just like shook that he just started, right? But he said that he's just renting it out. For him, he's buying, he's renting. At that price point, I know he's not making cash flow, right? But I think that for him, it's just the equity, right? It's going to increase in value. And so he's like, I'm buying homes in Richmond. I think it's what he said is that people who were victims of the California fires last year, whose homes got burned down in Santa Rosa, a lot of people are leaving that whole area, Marin Santa Rosa area, and then moving across to Richmond because there's less fire hazard in Richmond, and you're still in the Bay Area.
Gotcha.
Houses are a little cheaper in Richmond. Well, they were a little cheaper in Richmond than they were in Santa Rosa and Marin, obviously. So they were coming over there, and so for him, it's like there was influx of people, and so it made sense to start buying in that area. And that was his that was his whole strategy. But it's a place that he knows, so he's like sticking to what he knows, So yeah, let me share my screen real quick. So this is the first property I was looking at, and I'm going to go through this and like this whole scenario, how everything played out. So we're looking at this property. It's pretty straightforward, right? Single family home, a 3-1. And this is what it looks like on the inside. It already has a tenant right now who I believe was paying $850, right? And going through the entire deal, I actually asked to pay $80 and for them to pay my closing. And they agreed to that actually, but we couldn't come to an agreement because of like the financing I had. Which is another thing, right? If you're doing a cash deal, like you wouldn't have as many hiccups. For me, I'm financing it, right? So because I'm financing it, there are just a lot more steps to it. So my people I'm financing with said he can only, because it's going to be an investment property, he can only do up to about 2% of my closing. So going through that process, he agreed to that. We did an inspection, and going through doing an inspection was kind of challenging because there was a tenant, and the tenant kept citing COVID as a reason why she did not want people to come in. So we couldn't get in when we wanted to get in. We had to wait till the landlord had to do a formal request to get in, and he had to be there. So it kind of pushed everything back on our end. So by the time we got to the point of having an inspection, we inspected the house. We saw there were some things wrong with the house, and the landlord. There were a lot of things wrong with the house, and it was going to cost about $20,000 to fix it. Right? There were issues with electrical issues. There were plumbing issues, and the AC was old, and that's a big deal for Florida, right? AC is a big deal, and so it's really old AC, and the water heater was old. So those were the four things. In going through the process, I didn't need to do the AC right away because it was still working. It was just old, right? And I didn't need to do the water heater right away because, again, it was working, but it was just old. So like I had to know that at some point I had to replace it. What I needed to do right away was the electrical and the plumbing, right? Because that could lead to other issues, one, and two, I might not be able to insure the house, especially if the electrical is messed up. So that was something that came up during the inspection. As we going through the process, the owner actually agreed to give me $10,000 on the back end to fix some things in the house, but the whole process started getting really challenging, and it wasn't looking like we were going to be able to close it in a month. And so I ended up pulling out of this specific deal because for my first deal, like I didn't want it to be too challenging, and there was like so many different things. But I also learned a lot going through this first property, right? The things that could be done outside the deal. I was trying to work everything within the deal, but the mortgage company essentially they said we couldn't do it within the mortgage, right? I had to finance at least about $60,000, right? That's the kind of the edge where they were. So we couldn't do that. So again, to another point, if I was going to make this a cash deal, I could have probably done a lot more. I might be a lot more creative with it because I wouldn't have had to go through financing that I've done in the cash deal. I'd have been able to have them pay my closing and potentially get them to fix more things in the building and pay a lot less. So, going the cash route, which is kind of how we're going, we can be a lot more creative in how we're doing this. Anyway, so that was what led to this one fell through, and so I went back and started looking for other properties, and then looking for other properties. I was looking for properties that were already cash flowing with tenants at a good spot. And
hey, Ike, before you move on,
yeah.
I don't understand. I don't really understand the piece with your lender. So that they're saying that you have to finance a minimum of 60,000. Is that what they're saying, or
yeah? So that's because it's because of, and I talked about this with some other lender, and people have like little benchmarks, and I was going through several of them. One was saying like he was at 65, and then I was at 75, and there was I don't know if it's just a Florida thing. And it's because it's an investment property, right? And then also the price range. Like if I was buying like maybe $20,000 house, it'd be a little different. But because it's at $80,000, right? One of them said like he legally cannot do it, and I didn't understand why. I was like, okay, but everyone really cannot really go below 60.
My understanding of it was basically that the banks have those thresholds, or the mortgage broker have those thresholds, because they're looking to make a certain return. And if that return is too low, according to their analysis, they're not willing to lend, a certain amount of money. So like in some places, like you said, it's 65, some places 75, et cetera, et cetera. It all depends on how much money they're going to be making, via the interest vehicle that they're using. That was my understanding, at least.
Yeah, and the person I was working with was saying like, it just wouldn't go through. Like they would kick it back to me. Like they just wouldn't. So the banks wouldn't take it at that point. So to those point, I think that's what it is. The banks are just like, no, we can't make the deal work.
And
and
so
it doesn't matter.
Was this a credit union, a conventional lender, soft money, hard money? What sort of lender was it that you were talking?
It was a conventional lender.
Okay.
Right. Yeah. Initially, I was going to go the credit union route, but I ended up not doing it because in my conversation with someone at the credit union, they were saying that they can't do investment properties right now. But I think I'm going to go back to credit union. After going through the first one, I'm going to go back to credit union and see what they can do. Just given what I've learned through this first process. Because I think I can still do it with the credit union, if I don't buy it under under an LLC. If I just bought it and then transferred it to an LLC, right? Which is another process which I'm learning, right? So with the property, I couldn't buy this under the LLC. I would have to purchase the property under my name and then transfer it to an LLC, doing something like a quick claim deed. So the quick claim deed is a way to transfer the property from me to my LLC, which is what I would do after purchasing the property. So yeah.
And then one last question. You mentioned there were several deferred maintenance pieces in plumbing, electrical, AC, and something else. Was that information derived from the inspection, or did you have like a contractor go out and take a look? And like, how did you get the $20,000 price point for the renovations?
Yeah, so that was definitely doing inspection. So that came out doing inspection. We didn't have the contractor go out because of the time, and that they would have to go out there. So this now fell to my broker. Christina's mom. So my broker, she had worked with a few contractors before. So because when I did the inspection, I got a report, a pretty solid report, right? It's like pictures and everything. And so we sent it to the contractor. I said, hey, look at this, eyeball this, and what's a conservative estimate for fixing all of this. And so he gave us a conservative estimate without actually going to himself.
Got it.
And so he just said, yeah, this is likely where you'd be at. So I was like, all right, that's good enough for me. And so yeah, but then other things like the AC and the heater, they're like, it's market cost, whatever the cost of the market, that's what it is.
It's just you buy the AC.
Yeah.
I got a question too. You said that you had gotten the sellers to, through negotiation, accept closing costs. How did you even know that was an option? Because I didn't know that was an option. And then what other sneaky deals do you have up your sleeve that we can use?
So, well, there were two things, right? One was we wrote in that we can back out of the deal if anything comes up during inspection, right? So, and I think if that wasn't in the contract, like you're stuck in that contract, right? But so we had that in the contract, or as an initial proposal, which they signed up on, saying that we can back out if anything comes up that we don't like during inspection, and they signed up on that. And then the closing one, I asked, I'm not even sure how I think I learned that somewhere, probably like researching credit unions in general, because a lot of credit unions will pay for closing costs. So I think I was talking with my broker, and I said, hey, can we just have them pay for closing? And she asked for that in the initial offer, and they said, yeah, but my lender said no. So the lender said that they can pay up to 2% of my closing. And then we like adjusted the price a little bit to come down to $78,000. So that was what we settled on, because we said 78 because I had to finance at least $60,000, right? So if it wasn't that, I would have probably knocked it down a little more, because closing was going to be about $5,000, like a little over $5,000. So that was how all of that played out. And then, wait, first of all, anyone like any more questions on this one? No? All right. So I ended up doing more research, and in my research, like, again, going through properties that were already rented, it was challenging to get people to, because some properties I actually really liked, but we just couldn't get in because the tenants were like, no, we're not going to show it. And then sometimes we actually had appointments to come in with the seller's agent, and they would get there, and the tenants is like, no, we're not coming in because of COVID. And so everyone like kept saying that. So I was like, screw it, I don't want a property that has anybody in it. I just want to get something in. I'll figure out how to get a tenant later on. So I ended up, looking at another property. So this is the one that I'm looking at right now. So I'm in the process of this one, and I'm gonna show you what it looks like. So, do you guys need me to blow up all the pictures?
That's fine. I think we can see it fine.
All right, cool. All right, so just show everything real quick. It's also 3-1. It's a different setup. Interesting. This one doesn't have central air. Sorry. It has all this wall units, which is fine. Something interesting about this place was that, which is also something I'm finding out about Florida, is like if you see this part of the house, it was added in. So this was not there before. This all part was added in. Then they put in an AC unit. So in a lot of homes in Florida, that's another way to increase your home value, increase your space. So what they'll do is like if a house has like a hangover outside, they'll just extend the roof out there and just like increase space that way, because they don't have basements. So that's a way for them to like push it out a little bit more and and add more space. Most people, if your master bedroom is located somewhere around that, what they'll do is add like a sunroom outside your master bedroom, and then add French doors going into the sunroom. So then it's like a super master bedroom or something like that. So it just kind of depends on where it's located, but it's very possible to increase your value doing that. So essentially that's what they did here. But they didn't do other things, right? So for me, going through this property, some things that I would have to do personally is what I would do is add central air, because that would increase the value, making it easier to rent and sell. But as it is,
what's the cost on something like that? I feel like that sounds like it'd be expensive.
It's actually like $4,000 to $5,000, so it's not super expensive. And essentially, so kind of going through this property, right? So This one wasn't in the market long, and so it had quite a few offers. And for me, I was just trying to get into something, and we ended up offering $80,000. It's going at $80,000. We did an assessment to see how much rent is going in the area, and we found out that Section 8 is paying $950 a month in that area code. I mean, that zip code. So that's what Section 8 is paying $950 a month. Rents are there between like $950 to like $1,050. So for me, this was for a similar kind of property, right? So for me, this was good. And my broker at the time had someone, a Section 8 client, who was hitting her up that she had Section 8 and she was trying to get into a place. So we're trying to see if we can get into a place real quick and then rent to that person ASAP. But it's like the timing wasn't able to work out. But anyway, knowing that's where we are, that we can be at a good point in terms of like price of the house and what rents are going for. So the way I'm looking at it for this particular one is that being in the house for $80,000, by the time I add the AC and extend the washer dryer hookup, which this doesn't have, I would be around the asking price anyway, right? So that was how, for me, made sense doing it that way. I thought that was pretty simple, nothing crazy. But I just don't know how much value that'll be in the house. We're doing a full inspection next week because I just put an offer in on this one that was accepted. With this one, it was a little tighter, right? So they wanted a binder fee within 5 days, and then they want a binder fee, essentially binding you to your contract.
Like the deposit goes hard.
Yeah. So that was 5 days, and then they want you to do an inspection within 10 days. And so there are all these different measures. And right now, inspections are not as, I don't know, it takes a while to get them. It seems like a lot of people buying houses, so a lot of people are doing inspections right now. So they schedule them far out. So we couldn't get it when we called last Thursday. The earliest we can do was next Wednesday. So our inspection is going to be on Wednesday, which gives us 1 day before the 10-day notice, because the 10-day notice is on the next day, which is the first. The people we're using are pretty good because they get the results back to you within, like, legit within 12 hours. Like, they do it, they assess it, send it to you online within 12 hours, so you have a chance to really look at it pretty quickly. The turnaround, they work 24 hours, so their turnaround time is really quick. The last time I did it, I legit had the inspection done at 1 p.m. the day of, and then I got it in my email at, like, I don't know, 3 a.m. the next day. So there's someone who's working on it like overnight, right? So they're 24 hours working on it. So yeah, this property, that's where we are right now. We haven't closed. We're hoping to close within 3 weeks. With this one, having gone through the first property, it's a lot easier because I just know what to expect. I know, like, I feel like I know, like, okay, what comes next? What comes next? Because I've done that in the other property. There's kind of less anxiety going through it, right? Because I've like already exercised these muscles before, so I feel like, okay, I can do this again. Yeah. And right, just in terms of like the neighborhood, initially I was like, so this is Google Maps, right? So I was like thinking about what are those like hangover things, but I guess that's like the style of the neighborhood. This is kind of what it looks like. So the pictures are kind of old, but this is like the style of what a neighborhood looks like. So this around it is pretty decent. And then some other things I found out about Florida, which I think is interesting. At least, well, I'm to Florida, for Jacksonville, I don't know where this is. So this right here. So like just thinking about floods, right? That's another thing. So not everywhere is, some places are technically flood zones, and they're usually like around the actual ocean, right? So this is a place where you can come in and you can search your property with the FEMA map and see, like, is my property in a flood zone? But if it is in a flood zone, either way, your insurance is going to make you have to get flood insurance. So when I went through the first property, I was so nervous about that, and they were like, "Oh, you don't need flood insurance." And I was trying to figure out how to calculate all of that. And this is legit like a map that tells you where things are, and like you can just see with all this different, I don't know, I guess the keys, and tells you like where you like what susceptible to in different regions. So so when I went through this property this time, I actually came here. I looked at on the zip code, saw where it was located on the map. I was like, all right, it's fine. It's not in a flood zone. Why need to worry about it? And then my broker was like, really, what matters is like, as long as you're not by the ocean, then you're not in a flood zone. And you don't need flood insurance. Because I had done some research on Bigger Pockets, and like FEMA can withdraw the maps at some points, and withdrawing the maps like can put you in or out of a flood zone. Sometimes people are on the border and they don't need flood insurance, and then like in 3 years, FEMA withdraws the property, and then all of a sudden, boom, you're in a flood zone. So it's like, yeah, so that can be sketchy, and that could happens more if you're around water. So in terms of Jacksonville, like this area right now was like the area to purchase. So this is North Jacksonville. Right here is good, but it's more expensive. And then like going further down south this way, in Jacksonville, is also more expensive. But right here is essentially North Jacksonville. Parts of it are like pretty dangerous, and the hood. And then like any hood, they're like the good parts of it, and like parts which are not as bad. But this is where they're having a lot of property for sale around like the $100,000 mark. You could get lucky and find something in this area, but when you do, it's definitely going to be a fixer-upper. So if you find something for like maybe 130, you're probably going to have to put in close to 80 to get it to the value of what properties in here should be. Yeah, just something else like I learned just from, I don't know, doing research in that area. So yeah, that's now pretty much where I am right now. Trying to close in a couple of weeks, and yeah, I don't know if anyone has any questions.
Oh, you learned a lot.
Congrats on making the move.
Thanks, man.
I hope this one closes.
Yeah, I hope so too, bro.
Thank you for watching. Please remember to like, comment, share, and subscribe. Peace.